So I spend a lot of time on this channel discussing and promoting the concept of relationship banking. In many cases, when we're talking about building out these relationships, we lead with the deposit accounts, the checking account in particular. In this video, I want to discuss how actually, once you have a high-level credit score and high-level credit profile, how you can actually leverage that to start as a credit card customer and how that can lead to great bonus opportunities on the deposit side. We're going to cover that strategy in this video. This is JP from Blueprint for Prosperity. To all my pioneers out there, welcome back. To all my new viewers, welcome in. Like the video, subscribe. We're constantly discussing on this channel how to increase your net worth and help customize your blueprint for prosperity. So like and subscribe if you want more of that quality content. So in many cases, the advanced strategy that is described on this channel is for you to lead in with the deposit account relationships, show these banks that you're trustworthy and have good financial behaviors through your own money, usage of your own money, and then advance your way out to their lending products once you have a rapport with them. Banks love to see direct deposits. They love to be able to monitor your financial habits, things of that nature. And they're more likely to be more liberal with you once you're in with them over a period of time. What we're going to discuss now is how actually going in as a credit card only customer or some type of lending customer, period, but especially credit card only, can lead to you getting some amazing bonus offers on the deposit side. Because believe it or not, credit cards are great financial tools for institutions to be able to gauge your financial behavior. It may even be argued that they could be a better gauge or barometer than a checking account, because your checking account is your own money. There's a different level of responsibility when you're borrowing the bank's money using a credit card. A whole lot more trouble you can get into using a credit card. When you're a credit card only customer, especially for an extended period of time, an institution starts to get a little bit of an appetite for your business, for more of your banking relationship. They can tell from your credit card transactions if you have, if you're likely to have, higher balances. They may be able to tell through your spending and your payments if you have a relatively high income. They can get gauges for these kind of things, where you're spending your money at, believe it or not. Some of these larger institutions have the ability to do analytics and tell whether or not you are spending your money somewhere or in certain places, in certain ways that may indicate you're somebody that is, has a reasonable or substantial income, or maybe even a high net worth individual. So once they get this information, then from that point on, they start to get a real appetite for more of your banking relationship, because now they can tell that there's a likelihood that you have a very strong deposit relationship somewhere. And you have to keep in mind, banks, the strength of banks comes in their ability to acquire a certain level of deposits and assets on their books. So that means in order for them to be able to lend out money and get returns, they need more deposits on hand. So they're looking for quality depositors. They're looking for quality banking relationships. People who maintain strong balances and have consistent direct deposits. Banks love them because at the end of the day, that's more money they can relatively count on that allows them to go lend out. So you going in and acquiring credit cards, especially with larger commercial institutions, this may apply with smaller and regional banks, but to be completely honest, sometimes they don't have the same, data capturing or data analyzing capabilities that these larger institutions do to really just monitor everything through their systems and probably get some kind of triggers or alerts to who's quality customers or who has high potential as clients. So I would say that the strategy is going to be more complementing with larger banks and institutions, your Chase Banks, your Bank of Americas, your Wells Fargo's, Citibank, those types of institutions, maybe a Citizens and, BMO Harris, they may be of enough size to where this strategy can work really well. You also want it to be an institution that kind of has historically made, checking and savings account offers on a regular basis. And the easiest way to check this is to go maybe to like a bankrate.com or something of that nature and see what institutions have promotions on a current basis. Capital One is another good one. These are the types of institutions that already offer specials to bring over deposit relationships. So if you can get a quality credit card with them, use it for 3 to 6 months or so, and you show good financial behaviors, you show that you're making good on-time payments, big chunks in your payment if not paying out in full, this can give these institutions a great indication of the type of client that you probably are and the type of assets and balances you probably keep. And that'll be enough to entice them to try to find you and bring your business over to them. Because you have to remember, every bank is looking to be your primary, not your only, but your primary. And a credit card could be the perfect tease if used properly. I wanted to bring this strategy to you because it's getting more important to learn how to leverage the banking system and the financial system to find earnings, to find perks and value without having to, punch a clock or take a lot of risk. So I wanted to teach this to you guys because in many cases, many people don't pay attention to, how they establish their relationship with banks and how that can either help or hurt them in the long run. So I want you to exercise this strategy. This is gonna work best if you have a solid credit profile, has a reasonable amount of age, and you can go in, completely from scratch and jump right into a credit card with these institutions. If you can't qualify for a quality credit card with these institutions out of the gate, or if you're not sure, the strategy may not quite be for you yet. You may want to do the deposit side first. But if you have a strong enough credit reputation, you're in proper position, and you can acquire these credit cards with these higher ranking commercial institutions, then I can assure you that getting their credit cards, using them properly, putting attractive spend and making attractive level payments on it is going to open new doors for you to get some massive incentives on the deposit side. So leave your comments down below. Let me know if you have any experiences with this or if you have any more questions about this strategy. I'd love to respond to you in the comments. If you want to support the channel, a couple of those great commercial lenders are down in the description below. I have American Express, I have Capital One. If you guys want to take advantage of some great welcome bonuses while supporting the channel in a win-win, the links are in the description. Other than that, to all my pioneers out there, I want you to stay focused, stay in motion. See y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.